Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 3rd of June, 2020, just getting on to 5:30 in the afternoon. That's p.m. Central Time. Well, the stock market went into what I refer as a melt-up. I was expecting the market to show some resistance today. It showed none. What the market instead did is it blasted to the upside. A large part of this is the openings in the U.S., Italy opening its borders, countries getting back to normal. And that's fine. This could be possibly the Johnny-come-latelys coming into the market too. And I realize where the market's at, and we'll talk about that in a minute. As the stock market melted upward and just kept going and going, we saw that markets related to it, like bonds and notes, well, they came down as the trade just said, hey, maybe the Fed's not going to do so much. The environment's so good right now. Please understand, the stock market is one barometer of the economy. It is not the economy. The economy, you're going to see in data that is yet forthcoming. We're going to get important jobless data tomorrow. We're going to get our first employment look. It's going to be on Friday, probably coming out. They're guessing 19.5% to 20% unemployment. Those aren't good numbers. Then we have to get through down the road how many businesses can reopen and what does it look like as they reopen? How do they survive in a muted society right now? I don't have the answers to this, but the stock market seems to, and it's just on a tear to the upside. As you take a look, this market gained today another 71 points overall. This is Thursday, so we're up right now on a weekly basis, 71 points. As we take a look at the chart here, you can see that for tonight we're down 4.5, but the market is still near the highs that we've just made, not giving up much. The pattern is still bullish as you have higher lows and higher highs. So that's a bull pattern. The market had a bullish crossover, so my warning to you that the market might go up from there, and I've said that when you got that, watch out. It began it yesterday, it followed throughout the day, adding 40 points, and it's still at that point. Where's the resistance then? Before we get to the resistance, we see the levels of support. They're now down from 30.03 to 29.47.25, the combination of the 200, 100 in green, and the 18-day moving average of closes. The resistance is right here. So the market went to the upper Bollinger Band. Let me point you where you're at. Today's high, 31.29.5. Didn't quite hit it at 31.31.25. Still hasn't hit it, but that's where I think the pros will, again, back away from the market and look at these areas to potentially buy. Now, for the past couple of days, I've been mentioning to you that I had in my updates been putting up buy signals under the market. Clearly, they did not get filled. C'est la vie. You don't catch all the trades. I had one wise guy write, well, look at how wrong you've been. I haven't been wrong. And by the way, it's not about me being wrong or right in this. I'm telling you what I see. I think I jumped on the bull wagon telling you that as you entered this period, you began pushing out here. I said, this market looks like it's going to move higher. It did. Embedded reading. What do you do when you have an embedded reading? You're only bullish, period. When you lose the reading, you're looking for the correction to set in. So until that's lost, as the market pulls back, I still expect to see the buying come in. I think the slow stochastics will give you the signal before the market's ready to break. That's what I'm expecting. They are not throwing it out at this point. You're embedded also in the NASDAQ. Now, the NASDAQ is watching that rotation. What I have said is I think there's rotation going on. I think that the FANG stocks, the tech stocks, have built in tremendous value, and they've got to see that the underlying parts of it can come to them. But now I think it's industrial value. I think the factories are opening. The retail's going to open right now. So as that's happening across America, we're going to see just how that comes in. Any sale is better than zero, right? Any workers in a plant are better than no workers. So those are the areas that are coming up. We've already seen what's going on with the FANG stocks. As people go home, while there's still great demand, the question is, do you need as much of your Netflix, your Hulu, your Roku? I can go on in just that area. People are going to look at their wallets, their bills coming in, and there'll be some moving away and saying, you know, I'm back at work. I really don't need all that at this point. 3-month vacation, you needed it. When we come to the Dow, you're right at key resistance. You're at the 200-day moving average and the upper Bollinger Band. You know what I'm going to tell you. I think the pros took some money off the table right at those numbers. It's embedded. I think they will buy the market back on a good break. I don't think they'll look at 10, 15-point breaks to be a buyer. If not, it just moves out. But you've had your breakout. I got what I wanted. I got the movement in the market. Now the question is, I poised it this week. Is the 18-day average going to get over the 100 the way that it did in some of the other indices? As for the Russell, I'm hearing a lot of talk where a lot of market analysts are rotating to this area. And the reason, they just think it's undervalued and that the rotations are going on. I don't know. Small cap stocks, how do they survive in this? You know, the big cap, we know. Looking at it, I see further resistance back up here. The upper, first 200-day average, then the Bollinger Band top. Now that Bollinger Band top comes in at what, 1481.70. We're not too close to it right now, but we're getting there. So those are the areas I'm looking for the resistance in. In the VIX, I'm expecting the pros to write puts if this market is down tomorrow. You'll say, well, he's wrong. Hasn't hit it yet. But I think that if it hits it, they're going to write them and they're going to look for a move back towards the 18-day average of closes. We'll see. So far, it's worked for them back over here, and it worked over here. And when you come back to these times, it was working all through that. Writing a call always has more risk than writing a put. You can go to zero. Well, some markets go beyond zero. We saw that with crude oil, right? But typically zero is it, and trying to get back to an 8 or 10, that's very difficult. That's what I'm expecting to see. Now, what is going on here? Is the market beginning to say to us that, hey, the stock market's on a tear, maybe there's going to be more than a U-shaped recovery, maybe it's a V, and all of a sudden they're adding premium into what? Yield. So you're going to get more yield in these markets. That's what's happening, and the market is demanding it. You're still caught in this pipe, as I call it, in the 10-year note. As you can see, if you go to the 5-year, you probably see the same thing. Breakout to the downside has been in work in the dollar index. Now I'm looking to see for the longer term traders, are we going to get the 18 under the 100-day average? We haven't had anything like that in a very long time. I'm just standing back here to see if I can even find a crossover. And you really didn't. You've been just staying. This will be the first time that's done it in a very long time. You have the embedded reading. You have the flip-flop of this. In the Eurocurrency, be careful tonight on any trades you put on in the euro or the dollar, as we're going to get the European Central Bank's monetary policy tomorrow. As you know, so far the European Union, which is different from the European Central Bank, they keep talking. They want to throw $750 billion of help to the marketplace, but it takes 27 states, if you will, members to get it done. Getting that to work, that's why it hasn't happened at this point. You can hear all the talk you want. The European Central Bank, though, it can do certain things. It is not out of bullets, and we'll see what happens. The market is anticipating more bond buying in some manner. The yen, when you have a risk-on environment, why do you want to own the yen? And that's what's happened. So the yen is dropping because there's no reason to own it right now. You're getting that embedded reading. It's a breakout to the downside. Why is it a breakout? If you look at yesterday, the bottom part closed right at the lows, and you did it again today. Two closes like that, you'll have to get over 93.41 for me to think that this market isn't a breakout to the downside. In Bitcoin, all we did is we got up 2 days ago to the upper band. We've come back to the 18-day average, and we're just hanging there. The market is developing one of these pipes. Do you see it right here? And here, the Bollinger Bands. Momentum's going flat. So it's getting ready for another move. I'll probably start narrowing this in as the market comes in for you, and I'll close the gaps between these days so you get to see the chart action even better. In the Brent versus WTI crude, well, I started off telling you nobody quite knows what OPEC's going to do. I personally think they're going to extend through July and go month to month to see what they've got to do. I think they hate the fact that as they've cutting their production, it's going to help prices come up and get the U.S. producers back online. And I read all these reports that now the U.S. producers, they're going to need a lot higher prices. Nonsense. Nonsense is what I'm saying. Yes, is a group maybe, but at $35, $36, there is a group of them that make money, and they're in that field to do one thing. It's make money. Now, it depends on the company. It depends on their bank resources. There's a lot going on there, but there is demand, and the EIA is coming out, and they're guessing that we're starting to see a 3 million barrel a day increase of demand at this point. So I'm watching this, EIA coming out with their numbers too. Resistance is the differential of 252 between these. When we take a look at the Brent, you can see you haven't been able to quite get up to an upper band yet. You're close, but you've got the embedded reading, and until that's lost, not much you can say. If you lose it, I look for prices to retreat back to the 35, 40 level, whatever that 18-day average is then. In the WTI, you're running into big resistance against the 100-day average. Now, today's high in the market was 38.40. It's pretty darn close to 38.58. I mean, you're knocking on that door of it. Wouldn't be surprised if some people, because of tomorrow's meeting in OPEC, take a little bit off the table, but as long as the embedded reading's there, I think they stay overall bullish. Nat gas and the August contract I've got here, I think the July might be a better one to do. I must have changed on me as I did this. We have automatic changes that happen. You're losing the embedded reading, so you might get more of a bounce in the market if it stays lost in the August. But when did it lose it? It did not lose it. It lost it on the close today. Here's a 2055 reading, and you're losing it even further. So this might be an area where the traders do some short covering, seeing if they can get a bounce. The problem that you have in the nat gas is that it's going to rely on a hot summer to get some demand. Number two, the problem it has isn't the hot summer. The problem is more oil's produced in the U.S. A byproduct is nat gas. We're going to get more supply. Low prices would have stopped that because of the shut-ins on the wells. I discuss this and a heck of a lot more in my daily reports. Now, for those of you that don't know, I write reports twice a day. I try to get out my evening report just before 8 p.m. Central Time. By then, I've got all the grain markets and the other markets in the world that I want to see. What are they doing? I've got it in a chance to see Asian markets. If there's reports coming out of Australia, Japan, China, already I get to see some of that. I write for somebody like me. What does that mean? I want headlines. I want the analysis of the headlines. I want what the market might be focused on tomorrow. And I want it to be short enough where it doesn't take up a lot of my time, but it tweaks my interest. That's what I do. Then I tie that together with the videos that are my subscriber videos, and they're a lot more in-depth than these. You get 2 of those depending on what you subscribe for. I have an afternoon Spider ETF video, and in the morning I have a futures video. The futures video covers what's happened overnight for the futures markets, which helps the traders for the Spider ETF, if you think about it, because those ETFs specifically, they're going to be looking at what the futures markets do because so many of them are based on that. How do you find out more? Just go to our website under the word research. It's all explained. If you haven't tried one of them, we have free trials in our free offerings package. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.